In this video, we'll be discussing the Scattergraph method of classifying a mixed cost into its variable and fixed components. Remember that a mixed cost, sometimes called a semi-variable cost, is a cost which has both a variable cost component and a fixed cost component. The formula for a mixed cost is as follows. Total mixed cost, or total cost, is equal to the variable cost per activity multiplied by the level of activity plus fixed costs. We know that variable and fixed costs do not behave the same when the level of activity changes. Variable costs change as the level of activity changes. If the level of activity goes up, the variable costs go up, and if it goes down, the variable costs go down. Fixed costs do not change with the level of activity. Regardless of whether the level of activity goes up or down, fixed costs remain the same. Well, within the relevant range. In order to perform cost behavior analysis, it's critical that mixed costs, which are a combination of variable and fixed, are classified into their variable and fixed components. We know that mixed cost data is collected at different levels of activity, and then it's analyzed to separate the variable and fixed components. There are three main methods of separating mixed costs. In this video, I'm going to cover the Scattergraph method. This method visually represents the relationship between the costs, such as total utilities, and the cost driver, such as the number of machine hours, which is also known as the level of activity. All of the data points are plotted on a graph, either manually or using Excel. Costs, which is the dependent variable, is plotted on the vertical axis. An example would be total utility costs. The cost driver, the independent variable, the level of activity, is plotted on the horizontal axis. An example would be total machine hours. The easiest way to demonstrate this is using an example. Phoenix Limited has determined that machine hours is the appropriate cost driver for the company's total utility costs. Remember that this means as machine hours increase, total utility costs increase, and as machine hours decrease, total utility costs decrease. Phoenix has collected total utility costs and total machine hour usage for the last 6 months as follows. July, utility costs 7,040, machine hours 2,160. August, utility costs 5,920, total machine hours 1,840. September, utility costs 6,048, machine hours 1,920. October, utility costs 5,120, machine hours 1,600. November, utility costs 4,900, machine hours 1,720. December, utility costs 6,880, machine hours 2,240. Prepare a scattergraph based on Phoenix's information using cost for the vertical axis and the number of machine hours for the horizontal. Based on an examination of the scattergraph, does there appear to be a linear relationship between the utility costs and the number of machine hours? We could do this manually, but let's use Excel to create a scattergraph. Step 1 is to input the data into Excel and label the columns appropriately. You can see here that I've transferred all of the data from Phoenix Inc. into Excel. Column A is the month, column B is the total utility costs, which is my dependent variable, my vertical axis, and column C is the total machine hours, which is my independent variable, my horizontal axis. However, in order for this to work properly and simply, we need the horizontal axis to be in column B and the vertical axis to be in column C. So, using the copy and paste function, I'm going to switch them around. Okay, now we have the correct orientation for our columns. We have the horizontal axis information, total machine hours, the independent variable, in column B, and the vertical axis information, utility costs, the dependent variable, in column C. We can now move forward to step 2. Choose the insert function, which will allow us to insert a scattergraph. Now highlight the 2 columns that we'll be using, including the titles, total machine hours, and total utility costs. I'm highlighting from B2 to C8, but your highlighting will depend on where you pasted your chart in your Excel worksheet. Now click on the Scattergraph icon to see a description. It indicates that this icon is the Scattergraph icon and that if you click on the arrow beside the icon, you'll be able to see the different graphs that are available. Once you click on the arrow beside the icon, you'll get a drop-down menu. Choose the first icon in the upper left-hand side of the drop-down menu. If you hover over it, you'll get a description indicating that this is the scatter chart, which is exactly what we want. Now, when you click on that icon, you'll get a scattergraph, which visualizes the data. Note that the total utility costs are on the vertical or y-axis, and the total machine hours are on the horizontal or x-axis, which is exactly what you want. We now need to name the axes, so click on the plus sign in the upper right-hand corner of the chart. This will open a drop-down menu which allows you to choose Access Title and adds generic titles to both axes. Double-click on the horizontal axis and rename it for the cost driver, which in this case is total machine hours. Remember, this is the independent variable, the level of activity. As this variable changes, the total costs change because the total costs are the dependent variable. Double-click on the vertical axis and rename it for total costs. Here, total utility costs. This is the vertical axis, the dependent variable. Your scattergraph is now finished. Remember the required. Based on an examination of the scattergraph, does there appear to be a linear relationship between the utility costs and the number of machine hours? We can see here that there is a relationship between machine hours and utility costs. Costs go up as the number of machine hours increase, and vice versa. As the machine hours go down, utility costs go down. To see this more clearly, we can use Excel to add a trend line. If you click on the graph, you'll again see the plus sign in the upper right-hand corner of the graph. You can see that the last item is to add a trend line, which indicates the relationship. This adds a blue line to the scattergraph, which helps you to visually see the relationship and if it's linear, which in this case it is. We have now taken our data and, using Excel, created a scattergraph which shows us the relationship between the machine hours used and the utility costs incurred. We can see that producing a scattergraph is simple and allows us to identify general relationships. It also allows us to identify outliers. What is an outlier? Outliers are data points which are outside the remainder of the data set. One that lies outside, meaning it's far larger or smaller than the other data points. For example, look at this scattergraph, which was developed using a different data set for machine hours and utility costs. You can see that one point in particular would be considered an outlier because it is significantly different than the other points on the graph. Management might wish to further investigate outliers to determine how and why they happened. This is one of the main benefits from using scattergraphs. Going back to our original scattergraph, one of the drawbacks is that even though we can use the scattergraph to visually interpret the relationship between the cost driver and the costs, we do not have a cost formula which we could then use to predict costs at different levels of activity. We now have the benefits of scattergraphs, such as simplicity, visual representation, and identification of outliers. But we also have the drawback, which is that there is no objective cost formula which can be used to predict costs at different levels of activity. That's it for scattergraphs. As always, thanks so much for watching.